Yeah, thanks. I mean, great to it. And all the interviews up, I think the information so far has certainly been informative. And I definitely found it interesting asking the question how many people have invested in crypto. And I was surprised by the amount of people here, because often you don't see that. Because we had a discussion earlier today where we start this discussion. Probably one of them would be to make people understand that Bitcoin is not that little gold coin with the B on it that looks like a Kruger Rand that you go buy somewhere. So conversations vary from that to very detailed discussions. But yeah, so just on my side, Reginald Labuschagne, still Labuschagne, although I've been living in Cape Town for a while. I see some of my namesakes in Australia have changed the way we pronounce our surname, but still the traditional way. I represent Sanlam Private Wealth. We're a niche business within the biggest Sanlam group that focuses on high net worth individuals. So basically a private client business. We look after private clients. We set up to manage private client investment funds, help clients manage their assets, make sense of their financial situations. I'll give you a bit of a brief synopsis of our business, what we do, how we operate. And before I get into the whole way of thinking about how you invest in these things and what role they can play in a portfolio, I'll just to give you a bit of a introduction as to what we do, what our role is for clients, and then how do we take that into consideration when we look at these assets and how we actually give our clients exposure to it. I've got two of my colleagues sitting in the back, Donnie and Bernard. We've got about 80 actually client-facing portfolio managers across the country. One of them got an office here in Pretoria just across the parking lot. So anything I say here today resonates with you, you can go speak to those two gentlemen and go ask them for a coffee and take some discussions further. So I think before I get into this whole discussion, as I said, we've got a certain role that we play for clients, right? We've got at the end of the day, you've heard a lot about regulations, you've heard a lot about all the laws and things that happen. At the end of the day, we are one of those regulated entities, right? So at the end of the day, clients come to us and they trust us with their capital, whether those could be hard-earned capital, could be inherited capital, everything in between that as well. And ultimately, they look at us and they say, listen, help us either achieve some form of objective. That could be retirement, that could just be some goal that you want to achieve. A lot of our clients vary from, I just need to get to a point of retirement where I'm comfortable, to some clients that are globally wealthy. We need to set up structures for them globally. We need to think in dollar terms. We need to manage their assets and achieve different goals beyond several generations. So your whole way of thinking with those clients are also very different in terms of the assets you buy, the risks they can take, the liquidity risks they can take. So just a quick introduction on Sanlam Private Wealth. It's often, we joke about the Sanlam group thing because people think Sanlam insurance business, very middle market business. And we often the lesser known entity within the biggest Sanlam group, but the interesting thing, we've actually grown the business to the second biggest private client company in South Africa. We sit with a whole bunch of global offices. We've now recently launched our Guernsey business as well. So we sit for clients. A lot of South Africans, as you will know, have either financially taken their capital. They haven't financially officially immigrated, but they have taken their capital and look at their capital in global terms, in hard currency terms. So we need to be able to cater for those clients, and a lot of clients have just immigrated and left South Africa. And we still look after a lot of those clients as non-raised clients. So we do have offices across the world that we can service these clients to, and we sit with about close to 200 billion in assets under management. So a lot of clients have trusted us with their money, and where I fit in, my role as head of product and strategy, if you think about what we do, we deal with private clients. Private clients often have very unique needs, right? They come challenge us and go, listen, this crypto thing is getting very interesting. What's your view on it? And we got to have a view on that, right? We've got to understand that industry. We've got to understand what's going on in that space. So I spent about 2 years of my life digging around in this environment, spoke with people across the globe. We spent quite a bit of time with providers in the UK, US, went to a couple of conferences. In Cape Town, there's a big bubbling environment that's very active in this space. And it really varies from the evangelists that in the early days, if you think where this thing started, it started off as a very anti-establishment, anti-society. When I say anti-society, anti-regulation rather, or institution. If you think about the post-financial crisis in 2008, 2009, a lot of people said institutions are failing at looking after my money. Basically, what people would say, you want to refer to them as the man, whether that's government, whether that's big financial institutions. So you had people that literally went, we are rebelling against the system and we're going to go build an alternative financial world out there. So I met people that literally went and said, my world is every single asset is in the digital environment. If I don't like what's going on in South Africa, I'm going to move somewhere else and I can transfer all my wealth very quickly to a different country. I think if you actually step back from some of those initial thoughts, there was good merit, and you often need rebels in society to challenge the existing infrastructure. But if you take where that thing started and you fast forward to today, a lot of that was interesting thought processes, but not practically executable. You can't just up tomorrow and go to America and think you're going to plug yourself in there and go live there and make use of your crypto or your digital assets in a different country. There are laws, there are regulations. We've heard quite a bit about that today. So where Bitcoin started as something, the crypto space started as something they wanted to be very anti-society, the way it's actually being adopted now is very much in a regulated environment, right? So all the institutions that everyone said you need to get away from, they're now the ones that are major adopters and interesting under a very regulated environment. So just going back to and I'll get back into these things in a bit more detail later. So just touching a bit on what we do as a business. So at the heart of it, we're a private client portfolio management business. We manage assets for clients, but around that, we're basically a turnkey private client solutions business. So we manage everything from local only managed portfolios, so everything from JSE listed portfolios to multi-asset solutions, so things that go across the various asset classes. We got a range of global solutions, so things that span across South Africa and the rest of the world, and things that are purely based in hard currency, so whether that's dollars, euro, pounds, etc. We've still got a very big stockbroking derivatives business. We've got clients that like buying futures, options, speculating on different assets across the world. A very strong part, Pierre referred to it earlier, setting up all the trusts and companies. Especially when you deal with globally wealthy clients, you need to get your structuring right, and I think you covered that very well. So I'm not going to touch, so that's quite a strong part. We've got very strong relationships with certain legal firms that help us in that case as well. And then we've got this interesting component that sits on the side. We've often got clients that sit with a big portfolio. They don't want to necessarily sell that portfolio. They might have a liquidity requirement to buy a business or buy property. Often if you're an entrepreneur, you would know it's difficult finding capital. So we can lend against your portfolio. You can use that capital, do whatever you want with it. And at the end of the day, we manage the loan to value in your portfolio. So there's no monthly capital requirements in terms of repayments on that. And it's a practical thing for certain clients. But again, sophisticated for very specific clients. I'm not going to go into all these things, but we've got all the different model portfolios. I just want to mention one thing that's a bit different. We don't manage big funds. We don't sit with a big CIS and I say, just invest in our fund and you'll just get this return. We are set up to manage individuals' capital. So when an individual comes, we build a portfolio around your specific requirements. So if there are requirements, and that's a lot of my role is actually understanding things like private equity, private credit, not just the traditional stuff in equities, bonds, cash, property. We actually go and where clients need these different type of asset classes, we can see how do we build that within your total portfolio, what role does it play in your portfolio, and how does it help you get to your objective at the end of the day. Just a bit of, you've got to have a bit of a bragger. Our funds have done well. Maybe just to explain the graphs. We're all bad at showing graphs all the time, and I'll get back to some of the reality about graphs. The blue is our portfolios in the SA equity space and the multi-asset space, so that's basically like a balanced portfolio, high equity balanced portfolio. And you can see how we've done in this case against the market, the JSE, and in this case against the average equity fund in the market in South Africa, and in this case against the average balance fund in South Africa. So we pride ourselves on doing well for our clients over time, and that's something we have to do when we take into consideration these digital assets as well, right? So in order for us to understand an asset, we've got to understand the role it plays in the portfolio. So whether it's a digital asset, whether it's a private company, whether it's a listed company, every single one of those things has got a role that it plays. And we heard some of that. I'm not here to say whether I think they're good or bad investments, but we got to understand the risk that a client takes, because there's always two sides to the story when you look at an investment. There's the risk and there's a return, right? Each one of those things has got a different role it plays in the portfolio, and I'll explain some of that in a bit more detail. But we've got a very specific investment philosophy that we have to apply. If we're going to do well for our clients over time, we've got to consistently apply a very rigorous process to do well for our clients over time. So everything with us starts with understanding the price we pay for specific assets. I'm not going to bore you with all the detail on these things. When we pay that price for an asset, right, we've got to understand the risk and return payoff. So do we think the current price we're paying for, there is more upside to this than downside, right? Because there's barring for one or two assets, there's generally a downside as well. And we've got to make sure that the skewness of the risk favors the upside rather than the downside. when we buy that asset, we've also got to understand the perspective around the environment in which we buy that asset. So there's certain cycles in the market where certain assets price a certain way. There's a reason for that. So when we buy that asset, it might look cheap, but there's probably a good reason why an asset might be cheap. It doesn't mean it's a good asset to buy at that time. And at the end of the day, what we try to do just to sense check stuff. We're not technical analysts, but there's certain patterns that repeat over time in markets. So sometimes you don't understand something like we've had recently with the high inflation, everything that's going on in the markets. There's been previous cycles like this, so you can gauge some sense. None of us know what's going to happen in the future. We're not certainly sitting here knowing what's going to happen to the price of Bitcoin or the price of NVIDIA or the price of Sasol for that matter. But we've got to understand sometimes there are, as I said, patterns that repeat themselves, and we've got to try and manage that risk when we do all these things for clients. So just to give you an idea how we value something, I'm not here to talk about mining stocks, so don't worry, not those type of mining stocks either. So generally we break a company up. Every company is different. Glencore is a very complicated company. Mining companies in general are complicated because once you start dealing with the commodities go through cycles. There's all sorts of demand and supply issues around that. But we basically build up the price, right? So we go understand every single component within that company, what drives the price, what costs do they have, what profits do they make, how sustainable those profits are. We then sense check that through different cycle. We have a through the cycle price that we think the sustainable price of something like gold, copper, whatever it might be. And then we play different scenarios to see how risky is that price in different scenarios, whether it's going to go up or down. So that's just when we, as I say, when we try and understand an asset that we buy. So now we obviously start getting a lot of interest from our clients. As I said, we've got about 70, 80 portfolio managers across the country. They sit with clients every day. This crypto thing comes up. Johnny heard from Sunny at the Bri that, listen, they see how much money I've made in this space, right? So people don't understand the initial thing, but the initial thing that piques an interest is either you understand the technical thing behind it, or you understand there's money to be made in this. And I think a lot of you have probably been through some cycles. As I said, I'm going to talk about the emotional stuff about the graphs in a second. But once you get into this whole, I'm happy you guys touch on the history of Bitcoin and all that. I'm not going to go into that. But there was this whole concept of moving away. We tired of the current system, so there must be a better way of doing things, right? And I'm happy you brought up the Airbnbs and all of that, because often technology is a regulatory arbitrage when it starts out. You can take Uber as well, right? Taxis. Everyone said tired of taxis, but taxis are regulated and they have to go from route A to B and they have to pay a license to do that. Uber came along and anyone could drive all over the place without any licensing. And then we saw the regulators and people fighting, and do we regulate this thing, don't we regulate it? And it works the same in this space. So it's good to be challenged. It's good to challenge existing models. And then we started hearing things like trustless systems. So, you don't have to trust the person you're dealing with because it's a global peer-to-peer network. It's open architecture. Everyone can see what's going on. I've spent 2 years in that space. I still don't understand what that means. I'm being facetious. I can't see when I transact exactly. I know people show me this software and you can trace it. The reality is the average man on the street doesn't understand that stuff. As I said, I spent 2 years digging into it. It is very complicated to understand. So I think you've got to go back to some of the base stuff that was discussed earlier. Those are the right reasons to think about these things, what role they could play and why you would invest in it. And I think even if you say in banks, people don't always understand the system behind banks, but you kind of trust the banks. When it comes to disintermediating people, I can only say it's good until it's not good. In certain countries, like you heard, where you cannot trust the government, and the government puts laws in place that almost makes it illegal for you to basically have a living, and Zimbabwe is a good example of that. There are things like Bitcoin, and that plays a very important role, because if you had some Bitcoin and the collapse of the Zimbabwean dollar, those people would have been much better off than not having anything else. I could tell you some horror stories of people we know in that area, and there's a very good book written about that I can advise you guys to read. But I think when it comes to trustless, people just go, okay, well, this is amazing. You can just trust the system, right? And I think there's false sense of security in these things. As you heard earlier, there's 23,000 of these things out there. That number varies all the time. I'll show you some stats on that in a second. But when you think you can just trust it, you've got to understand what that trust means. Because it's not regulated, believe me, there are a lot of these things out there that are, you've heard 95% of them scams. That number, you can pick a number, whatever that number is. But we saw these pump and dump schemes. We saw a lot of these things. So, as in that period of doing a lot of research, I opened my finance wallet. I staked on everything that you could stake on, and all those launches and ICOs, just to understand that with my own money first before we start exploring with clients' money in these spaces, right? So a lot of those things just didn't work out. I mean, as much as you've got very good technical people sometimes behind these projects that just don't reach scale, it's open source. You can copy and paste from people that did it before, so you can just have 10 of these things pop up in a short space of time. So those are all the things we needed to go and understand. This is probably what drives most of the interest for people, if we're honest about it, right? Most of you would have seen this graph. I mean, yeah, just to give you an idea, this goes back to 2002. Here's a whole bunch of different things from, and this is all in RAD, right? Just to be with 100% comparable. So you've got the JSE All Share, you've got the MSCI World, so that's the global markets, you've got SA Money Market Bonds. And you can see this is a log graph, so you just got to be very careful. And it doesn't look, this is the massive outperformance of Bitcoin against everything else, right? So everyone looks at the graph, and it's a very nice graph to look at, and we get excited about it. I think one thing you got to, there's emotions that sit in that graph, right? And most of you that have bought into this can attest to it. When this happens, I can tell you our phones ring off the hook day in, day out about everyone going, yokes are the dumbest people in the world. Why have you not got Bitcoin in my portfolio? Right? This is, you don't know what you're doing. You guys are behind the curve. You're old school. And everyone is in a euphoric state at that point. Now, most people end up after getting comfortable, understanding how to get a wallet, doing all of this stuff. You finally get your hands on the first Bitcoin. And I'm going probably into extremes here. And that often happens in that case there. Then you have a 70-80% drawdown. And then the phones stop ringing. No one phones us anymore. Everyone says, thank the Pope, they didn't put me into it. And then the next run happens, and we have rinse and repeat, right? So our job often is actually managing people's emotions. As much as we are financial analysts, portfolio managers, most of it is actually psychiatrists, right? We have to deal with clients, and I'm being honest. And most of it is actually protecting clients against themselves. So our job is going, you're here today, you want to get there over time. How do we manage the emotions in that cycle to keep you in the right asset classes that should give you a return over time? And we struggle with that just in the equity market. So if you start doing that, I'm going to skip this one. Just going back, if you go to the history, just from 2014, about 50% of cryptocurrencies have failed. You can see the number of failures year on year. That's the thing that's going to continue. But this is the one I want to get to. If you look at the drawdowns, right? The Johannesburg Stock Exchange is there. I can tell you every time the JSE drops down about 20% or 30%, everyone wants to get out of equities, right? They say this is the worst asset class. I don't want to be in this thing. Now, if you see something that drops 70, 80% at a time, I can tell you the emotional roller coaster on that is much higher. I'm not saying you shouldn't be in it. I just say everyone's got a different state of emotions that they can manage. It depends what your level of wealth is. Depends on your age, how long you have to save. It depends on your capacity for loss. If this money is gone, what am I going to do tomorrow, right? So I think all of those things need to come in, and that's part of the work that we have to do for clients. And when we go into portfolio allocation, just to give you an idea, if you're talking something like Bitcoin that can have massive drawdown for clients. So if you start, and this is just a reverse portfolio optimization. So what we have here at the bottom is the maximum drawdown that asset can have. So you can see from 0, that's a very safe asset, all the way down to 80, and what percentage of the portfolio that makes up. So if you had 100% in that, you can certainly see returns very good, but you're going to have these 70-80% drawdowns. Can you stomach the ride? That's the one thing. And as you then start going to different portfolio scenarios, if you only got like 18%, you can see you probably had and this is now adding it to a balanced portfolio as an example, just a balanced fund in South Africa. If you had 21%, you've got to understand that you're going to have drawdowns. If you got a portfolio allocation of about 16%, you're going to have a drawdown of about 21%, just to give you an indication, right? So this is what we have to understand for a client. Where does that tolerance sit? If you think this is a good asset class, because often clients come to us, I don't care what your thinking is, I'm going to put money in this thing. And then we need to understand it, we need to manage the risk and see how that meets up with the objectives of the client, right? Okay, so getting into how can clients buy? You've heard from Luno. So there's ways you can buy. ETFs have been around for longer than this year. People have been able to get exposure to the likes of Bitcoin and other cryptos as well through exchange-traded funds that go back a couple of years. they did the big things that happened this year is the SEC basically came out and regulated you can have a spot ETF. Now it gets technical, but what it means is the underlying Bitcoin price, you get a direct correlation, you buy this ETF. So you see the price, and that ETF is going to track that price over time. So you're actually trading the actual Bitcoin price. What happened prior to that, before it was regulated, you could buy Bitcoin futures. Now futures basically buy a contract today, betting on the price in the future at some point, what you think it's going to be. So that you never had a direct correlation with the underlying. So there was always a bit of a mismatch between the ETF's price and Bitcoin's price. So clients weren't always that happy with that, but you could get exposure that way. Currently, there's, I think it's about 11 ETFs, if I'm not mistaken, that's been listed. They vary. Some of them give you exposure through futures still today. That might give Ethereum and Bitcoin as an example. Some buy into mining companies that, as we know, these Bitcoin miners. So they track that in order to give you some exposure to Bitcoin. So there's a range of these things that are available out there. Clients can buy that through their stockbroking accounts with SVW. So that's the one way. People can obviously buy directly, as you've seen earlier today. The other way that people get exposure to Bitcoin is actually through a share. I mean, there's some companies that are listed, like MicroStrategies, that hold Bitcoin underneath. The problem with doing that is we've seen in the past, when Bitcoin goes through a massive run, that company trades at a premium to Bitcoin. Because a lot of people want to buy the company, then they can buy Bitcoin underneath, so the price runs far beyond where the Bitcoin price is. And the same happens sometimes, it trades at a discount. So again, people that see this and watch it from the side, they try and drop that market a bit, where they buy when it's a discount and sell when it's at a premium. So there's different ways of accessing it. But again, that's where you need to sit with someone, just understand these things and decide what the best route is. Now, just to give you an idea where our role comes in, how did all these things come together, everything I've said now, right? So this is just a scenario. You might sit with your financial advisor. As I said earlier, you maybe have some goals that you've got to, this is what we use here, an example of a client that's got, your retirement annuity, your pension fund, provident fund, you've built up about 5 million rand. You might have some other assets like a share portfolio or something else that sits outside, your after-tax savings, effectively, your discretionary money, of about 3 million. And this client's got an income need at retirement of in this case, our 67. We kept everything kind of real, so you don't build in inflation and everything into this. So if this just gives you an example, so the client will say, listen, at this point I'm going to retire, then I need to draw an income from this, and you can see with this capital base, with that income, you're going to have a step down at about 85 and then down at 90 to make your capital loss about 95. That's a typical scenario, right? Now people come and they say, but listen, I want to start investing in a risky asset, something like Bitcoin. We've got to understand what the risk is of that asset. So if it goes bust, like some of these cryptos have gone, I'm not saying Bitcoin's going bust, that's not the point, but you've seen when you're in retirement and you have a 70-80% drawdown of your assets, that has a big impact on what you can draw on a monthly basis and how that affects your capital base. So as an example, if you put a percentage in, as an example here, we've taken 1 million out of that 3 million to put in something like Bitcoin, well, call it a risky asset. I'm not going to say Bitcoin you're going to think I'm going to say Bitcoin's going fast, but an asset that doesn't work out. Could be private equity even, right? You can see the big impact on where the other one was about 85. You can still make your capital loss, but your income is going to come significantly down from about 75. So that means your standard of living is being influenced. You need to make some big adjustments in your lifestyle. Those are all the things that you need to think about in this scenario. So where we come in to say, instead of taking 30-40% of your assets, take a responsible thing, like take 2.5% as an example. It's not a big impact. You're still down to 85 before you have any form of step down in your income that you can draw. But if you take a risky asset, depending on your situation, 2.5% might be suitable for some clients. It's got an income requirement. Other clients that are uber wealthy, they could go 10% into risky assets, right? Because they don't need the liquidity, they don't need the income. So again, for us, it comes down to the individual clients and how we need to work with that client in order to basically give them exposure to the right type of assets. And I think at the end, there's been some discussions from both previous speakers on custody. For us, the key thing is, how do we deal with this thing in your estate, right? I mean, as I said earlier, I dabbled a bit in Binance, and some of it will be my own bad admin maybe. But if I got hit by this proverbial bus in this whole process, that thing would have been gone, right? My wife wouldn't have known how to deal with it, my kids wouldn't have known how to deal with it, and I can tell you now, depending on who you have as your executor, they wouldn't know how to deal with it. So you just got to make sure, and I think you made the point very, very clear earlier, when we invest in clients, invest the money into a specific asset class, we've got to make sure that that asset class can be dealt with very clearly in the estate, whether that's in a fund or an ETF structure. That makes it very simple because it sits within your portfolio. That portfolio is very easily transferred across in the whole process, right? So, and for those of you who've dealt with estates, I can tell it's not a fun process. I also make one statement on self-custody. Self-custody is a great thing till it's not. So I can tell you there's great stories about people losing the keys, so if you're a very diligent individual, self-custody makes sense and you understand what you're doing, it makes sense. Often it doesn't make sense for the average client out there. So I think just do a lot of homework before you do self-custody. Something like Airbnb, again, it's a good example. I'll never forget because it bit me quite hard. I did a great booking and I still use Airbnb. I'm just going to disclaim that today. But we did a booking for December holiday. It was about a month before everything planned for December. Just phoned them to check everything's okay. And the lady said, sorry, I've got no idea what you're talking about. There's no booking on our record for you. That's a month before December holiday. The problem with that, people say disintermediation, all these things are great. Get rid of the man. When something goes wrong, like you send your Bitcoin off to someone else and you made a mistake, it's gone. You're not going to phone your bank and go, listen, whoa, I made a mistake here. So I think there's always trade-offs in these things. I'm not saying they're bad. You just got to understand what you're getting into before you make decisions just because something sounds good or looks good on the outside. All right. I think that's it for me.